Okay, so here we are on the Tesla page, and this is actually a great example of what Seeking Alpha can do. So what I'm going to describe now is how to use Seeking Alpha to get a sense of a stock in 5 minutes, right? And I'll also show you that if you want to spend 3 hours, where you would go from here. But here's the 5-minute view, which I think demonstrates how you can use Seeking Alpha in a really powerful way. Where I would start is here in the right-hand column, which are these 3 boxes here: the ratings summary, the factor grades, and the quant rating. The rating summary summarizes what people think about the stock. And there are 3 ratings. The first is the rating by Seeking Alpha authors. They're people who write articles on Seeking Alpha. The second is the average rating by Wall Street analysts who cover Tesla. And the third is our quant rating, which is a summary of the data, on all the available data on the stock, and what that data most likely says about the stock. We can come back to the quant rating and discuss that more. If I just to give a little bit more color, if I scroll down, this box here shows you the Seeking Alpha authors versus the Wall Street analysts. And what you see is that there are 19 authors here on Seeking Alpha who have written about the stock in the last 90 days, and 33 analysts. So unfortunately, what you can see is that on average, the Seeking Alpha authors are bearish on the stock. They think it's going to go down, and the Wall Street analysts are neutral on the stock. And here you've got the breakdown. So that's the top unit. And so the top unit here just gives you a sense of what do people overall think about the stock. The second unit is the factor grades, and this I think is really useful. What this does is it summarizes all the data on Tesla in comparison to all of the other stocks in Tesla's sector. So you can see that Tesla is part of consumer discretionary, its industry here is automobile manufacturers in third card. And so this card here summarizes data Tesla as a stock. And what I see here is it gets an F grade for value, right? Which means it's very expensive, right? But people know that, and people who love Tesla, they know it's a very expensive stock. But what you see here is it gets an A+ for growth, which means the company is growing really fast. It gets an A for profitability, which means it's generating real profits, and it's got good profit margins in its business. So if this company keeps growing at this rate, it's going to generate a lot of profit. It gets an A+ for momentum, which means that the stock has got a lot of momentum. You know, in investing, one of the best predictors of how a stock will do is how it's done in the recent past. In other words, how much momentum there is behind a stock. And so even for fundamental investors, for investors who are choosing to invest in companies based on how good a business they are and the valuation of the stock, choosing the right time to come in is very important, and momentum makes a difference. And the last factor here is revisions, EPS revisions. This requires a little bit of explanation. Wall Street analysts put out estimates of how much a company is going to grow, how much a company is going to earn. So for example, there are estimates for how much is Tesla going to earn in 2021 and 2022. And as Tesla releases new results each quarter, and as more information comes out about Tesla's business, the analysts change their estimates for how much Tesla is going to grow. And it turns out that if analysts are revising their estimates upwards, that has a huge impact on the stock, because it generates momentum and good news, and it makes the stock cheaper, because if you value the stock, let's say, as a multiple of its earnings the following year, and the earnings estimate just went up, it makes the stock cheaper. And so it can drive all sorts of things. So earnings revisions are very important. What's really powerful about this card is you can look at the factor grade card on any stock, and it gives you a picture of the stock. So you can say, what kind of stocks am I interested in buying? And if your answer to that is, I want to own growth, I want to own the future, I'm not too bothered about valuation, I don't mind buying stocks that are really expensive if they own the future, then in 2 minutes or 30 seconds, actually, this card here, the factor grades, gives you a picture of Tesla. So you can immediately say, is this the kind of stock that I want to own? These factor grades feed into the quant grade. The reason why the quant grade is neutral is because an F means it's very, very expensive. And so that factors into the quant grade. But for many investors, they won't care about that. And they'll say, the valuation doesn't matter. I don't, it would be great. I don't know whether you want to do this, Charles, to have a longer discussion about Tesla. But one of the things which I would say is Tesla is a great example of how individual investors got a stock right and professional investors got it wrong.
That's right.
Because there were lots of hedge funds and professional investors saying this stock is so expensive that they want to sell it. They don't want to own it. They want even to be short the stock. And if you look at the price chart for Tesla, this stock just went, look at this. It's up 397% in the last year, right? And so the people, the individual investors in South Korea and in America who were buying Tesla, they got it right when the professional investors got it wrong. And part of the reason is that sometimes individual investors sense when valuation doesn't matter and you want to own certain themes and stocks are going up because of those themes. And this card here, the factor grades card, gives you that picture of Tesla in 30 seconds. You can see it's a great company. It's growing fast. The stock has got momentum. The earnings revisions are good. It's just really expensive. And many people will look at that and say, I want to own it.
Talking about the Tesla, before we move on to the next section, I just want to have one question for you. Talking about my own channel, the investment theory I have is really based on growth stock, because in my opinion, there is a huge difference between a value investment and also the growth investment. So when it comes to value investment, my own definition of value investment is you have a stock price and you measure the value of the company. And in case the stock price is lower than value, you buy when it's cheap. And then until that price goes up to the value level, you own it. And then when it meets, you sell. That's my own definition of value investment. But in this era, I would say the industry 4.0 era, I don't think we have many opportunity of this value investment. That's why my channel, my YouTube channel is only focusing on growth, which means at the moment, the current value is not very significantly important. What's important is what would be the value of the company in about 5 years' time or 10 years' time. And then we buy as long as there's a significant difference between the current value of the company and 10 years or 5 years' time. That's how I introduce the stocks in terms of the investment value. Like growth basis. So because you just mentioned about the Tesla company's investment value, what kind of investment style do you prefer? Are you a value investor or a growth investor yourself?
I personally believe in growth investing for most individual investors and for myself, because first of all, I think because investors do not do well when they trade frequently. One of the biggest challenges for individual investors is how to not get emotionally sucked into the market. Because if you get sucked in emotionally to the market, where you feel great when the market's up or your stocks are doing well, and you feel bad when your stocks are down, that causes you as an investor to buy when things are up and sell when things are down, which is exactly the opposite of how to make money.
Yes.
What you want to be doing is buying when things are low and selling when things are high, not the other way around.
Yes.
So the key to successful investing for individual investors is to buy good stocks and not to trade them, but to hold them for long periods of time. We know, for example, from the data about investor behavior that most individual investors underperform the stock market on average. And part of the reason they underperform the stock market is because they trade. And when they trade, they lose and they do less well than the market by trading too frequently. So if the key to success for individual investors is to buy stocks and own them for a very long time, what you really want to be doing is buying stocks which you believe will do well in a 5 or 10-year period, and to hold on to those stocks. And I think that there's different approaches for how to do that, but it's very hard simply to buy stocks based on value where the company isn't growing and to do well in 5 years. So growth is really important. The question is whether or not you can combine some degree of growth and value. So for example, on Seeking Alpha, there's a very large community of dividend growth investors. They're investors who are looking for stocks which grow in the medium term, but also pay a dividend and are raising the dividend. And that way they're combining looking for stocks which grow, but also stocks which are quality companies and where the dividend yield is reasonably high, which is a value metric. And so that's one way of combining growth and value. But where I totally agree with you is that for individual investors, you should be looking to hold stocks for long periods of time, and you must buy stocks that are growing.
Okay, that's great. So that leads to my next question. If you believe in growth more than value, does it affect the way of calculating quant rating? Because quant rating is a combination of value, growth, profitability, momentum, and revisions. Did you put different weight on a different category, or is it evenly distributed?
Okay, so first of all, my answer to your previous question, Charles, was a personal answer, right? About the type of investing that I personally gravitate to. The goal of Seeking Alpha as a platform is to provide people with all the information and not to take a viewpoint about specific things that work. I think this is really important. There are different styles of investing that all work if you stick with them. What doesn't work is for individual investors is to trade too often or to keep switching investing styles.
Absolutely.
And so I think that that there are value investors who are really successful. And so the way we've designed Seeking Alpha is simply to provide the information to people so that they can say, if this is my style of investing, I now have the information that I need for that style. And so that's why this factor grades card here is so important, because it says, if you're a value investor, that can work for you and that can be good. You will not want to own Tesla if you're a value investor. If you are a growth investor and you just don't care about value, then own Tesla. The quant system and these grades were developed by an amazing person who I actually met at Morgan Stanley, called Steve Kress. And he's a quant genius. And he built this grading system and the quant system and the quant rating at the top. And what goes into the quant rating is not only the data about value and growth and profitability and momentum and earnings revisions, but other factors that actually predict the performance of a stock. Just if you run models and you crunch all the data, which factors have have the best predictive value of how stock will do. So for example, the quant rating also includes size of company. Like in many cases, larger companies have for a while in 2020 have done better. And I just want to show you really quickly. I'm sorry I'm giving you such a long answer.
No problem.
I'm going to click here and just show you what the performance is of these quant ratings and how they've performed versus the market. This shows the performance of Seeking Alpha's quant ratings, right, versus the stock market in the US, the S&P 500. Mm-hmm. What you can see here is that if you'd have bought the stocks which are rated very bullish by our quant ratings, since the beginning of the system, you'd be up 1,225% versus only 336% for the S&P 500. Wow. And so there's outperformance over the S&P 500 of almost 900%. And you can see this year, for example, I'm gonna hover over here, that the very bullish stocks are up 21% versus less than 5% for the S&P 500.
Wow.
So the quant ratings aren't really ideological. They're just a system built by a quant genius who's looking for the data to predict which stocks do best. And that's what goes into the quant rating.
Wow, that's amazing. I really didn't know. I was just thinking that it's a average of these 5 factors, but that's not true then. So it has a very complicated way of evaluating each stock.
Yes. And that's why we separate out the factor grades from the rating summary. Because the thing about quant ratings generally is that quant ratings are a kind of black box, which is you can say, well, should I believe this or not? Do I think they'll continue this amazing performance or not? But the thing about the factor grades is the factor grades, irrespective of your confidence in a particular system, the factor grades just summarize the stock for you. So they're a way in 30 seconds of saying, I just want to understand this stock, right? What is this stock like? And the factor grades give you that in 30 seconds. And so the factor grades are amazing for investors to make their own decisions. The quant ratings give you more help in should, if you want to rely on us, should you own this stock from a quant perspective?
Yes, absolutely. Very good. Thank you very much. Shall we move on to the next section?
With pleasure. This box here just gives you the ranking of the stock in its sector and in its industry. And what's really nice about this, so for example, Tesla is a consumer stock. It sells cars to people. Its industry is car manufacturing, automobile manufacturing. And in our quant system, this ranks it. So it gives you the rank in the industry and the rank in the sector. And so this allows me, if I wanted to, I could click on the rank in the sector, and here I can just immediately see all the top ranked stocks in this sector, which is consumer discretionary. And this is a great way of discovering stocks. I just showed you before that the very bullish stocks, which are quant rated, massively outperform the S&P 500, the market. So here's a way of discovering these stocks where you can then you can then go and drill down and explore the stocks more. So I think those 3 boxes give you in about 3 minutes a really wonderful overview of the stock. And it doesn't matter how experienced an investor you are. Once you just understand what value, growth, profitability, momentum, and revisions mean and why they matter, you now have a picture of the stock. And you have information which is as accurate as the most sophisticated professional investor. What we're all about is democratizing investing, giving individual investors amazing tools that they can compete with hedge fund managers. And this system really does that. I should mention, by the way, that the factor grades and the quant ratings, Steve Kress, who I mentioned, who was the person who developed these, he was selling this product to hedge funds and institutional investors for $5,000 a year per seat, per person. And we bought his company, brought him into Seeking Alpha and included this product in Seeking Alpha Premium for $240 a year, along with everything else in Seeking Alpha Premium. And the reason we did something crazy like that, to take a product that was really built for professional investors and is an amazingly sophisticated and powerful product and give it to individual investors, is because our philosophy is we want to help individual investors to do really well and to compete on an equal footing with professional investors.
That's why I call you trendy person, because that is a trend at the moment. We have an equality in terms of information and data. Everybody has an opportunity to be successful investor now.
Yeah, I think that's right. And also that often experts, kind of in inverted commas, get things wrong. And often we're seeing this, the crowd of individuals is often wiser than the experts. And we've seen that in lots of stocks and lots of investing. And, as Tesla is the perfect example of this.
Yes, absolutely.
All of the individual investors, like all the people you mentioned in South Korea who own Tesla, the professional investors were saying, you mustn't own this stock. This is a disaster. And yet look at how well people have done who own Tesla versus the professionals.
Absolutely. So now we could see that the overlook of each stock. So when it comes to Tesla, the value is very expensive, but we can see that when it comes to growth and momentum, it is top. So how can we find out more about each category of the grade? So how can we see that the growth is A+? What makes the Tesla a growth rating as an A+?
So this is I think one of the most amazing things about the product that Steve Kress built, this product, which is, what I said at the beginning is that our goal is to make it really simple and fast for beginner investors or investors who don't want to spend too long. But if you want to drill down and really understand this, you can. And how can we make that really easy? So the answer is that what you do is you just click on the name here. So which would you like me to click on? We can click on value, growth, profitability, any of these. Which one would you like to explore?
Let's go for growth, A+.
Okay, here we go. So I've clicked on growth, and what this does is it gives me all the growth metrics for Tesla. So it shows me the year-over-year revenue growth. So that's how much Tesla has increased its sales in the last year. It's grown sales by 28%. Forward revenue growth means how much is Tesla predicted to grow its sales by over the next 12 months, according to the Wall Street analysts who cover the stock. And for each of these, we compare it to the whole sector. So what you see, for example, is that consumer discretionary over the last year, which means products, or all consumer products, actually the revenue for the whole sector was down by 5.5%, while Tesla grew by 28%. And then we also show what the 5-year average is for each of these metrics. And here are all the growth metrics for Tesla, and we grade all of them. There are some that don't have grades here because they're not relevant to Tesla. But you can now see all of the underlying metrics for growth for Tesla. What this means is that you don't have to accept our grade, right? If you want to say, hey, I really care about revenue growth more than anything else, and I don't care so much about profit growth, you can say, that's what I'm going to look at. And our system gives you all of the data. And then if you scroll down a little bit more, this card here gives you the compound annual growth rates over 3, 5, and 10 years. So it gives you a lot of data about Tesla's growth with all of the underlying data. We do the same for value. So here, for example, is the Tesla valuation data, and where it shows you all the valuation metrics for Tesla and compares them to the sector. And you can see they're all very expensive. So they all get low grades on valuation. But growth and profitability, Tesla aces it on.
On the bottom left-hand side, we have an analysis versus a news. What would be the difference between these two sessions?
News is news on the stock. So when the company announces earnings results, or when there's news about how the company is doing, and we have a whole team of news editors. Analysis is articles by Seeking Alpha contributors about what they think about the stock. Is the stock a buy or is it a sell? So for example, here's an article by one of our contributors, which is bullish on Tesla, right? Meaning that he's very optimistic about the stock. And he's written an article here explaining why he thinks that you should own Tesla, or why he owns Tesla as a stock. So the analysis is really, what's people's opinion of the stock? What's their whole story about the stock? And the news is much more, what are the news stories on Tesla? And you can get both of these by, if you sign up for Seeking Alpha for free as well, and you put your email address in. If you follow a stock on Seeking Alpha, you have the option to get email alerts. And every time there's a new news story on the stock or a new analysis article about it, you'll get an email saying, hey, there's something new on the stock. Here it is.
All right. So I can see that the news will be coming from the public media companies or news company. But what about the analysis? How do you qualify yourself to write on Seeking Alpha? Because I don't think you will accept all the articles, right? You will filter the valuable information. So how can you become an analyst here?
It's really interesting. We don't require people to be a certain way. So we don't say, for example, you must have studied finance at college, or you must have worked for an investment bank, or anything like that. We judge articles and contributors based on how good the articles are. So when somebody asks to become a Seeking Alpha contributor, we just look at their articles and we say, is this person rigorous? Are they good? Do they understand the stock? Do they have something meaningful to say on the stock? And our editors look at that very carefully. And then once you're in, you become a Seeking Alpha contributor. We monitor all of our contributors to make sure that they keep up their quality. And we have requirements. So for example, we allow contributors to be anonymous on the site, meaning to not use their real name. But we know their real name, and they have to sign a compliance agreement with us where they disclose whether or not they own the stock. And the people who contribute articles to Seeking Alpha get paid for them. In fact, we've got people making a lot of money by becoming analysts by publishing articles on Seeking Alpha.
Can I apply?
With pleasure. With pleasure.
Fantastic. All right. What would be the next section you would like to show us on the website?
I'd like to actually show what an article looks like, and some of the tools to understand the article and the contributor. When you look at a Seeking Alpha article, we also put information about the author. So here's a description of this author and who the author is, and here's their article. And then what we also do is we show where they published the article on the stock chart, so that you can see how good the author was on this particular stock. And so here, for example, the article was published in early February. So it's very recent. And so it's not really fair to judge anyone. But since the article was published, Tesla is down 6.3% and the S&P 500 is up 1.6%. So we show information about each of the authors. The other thing which I think is really valuable is, if you're not yet ready to read whole articles on Seeking Alpha, you can also get a sense of what people are discussing on the main page for Tesla in this unit here called Bulls Say and Bears Say. So for the people who are bullish on the stock, here's the reasons they've given most recently for why they're bullish on the stock. And for the people who are bearish on the stock, here's the reasons they've given for why they're bearish on the stock. So again, in about 3 minutes, you can get a sense of what the key issues are. And then if I want to drill down and read a lot more, then I can do that.
So if you go up, there was the rating called essay authors. So this rating will be based on the analysis contributed, correct?
Yes, that rating is the average rating of all these people who have written articles about Tesla for Seeking Alpha. Whenever an author writes an article for Seeking Alpha about a stock, they have to put a rating on the stock. So we look at all the authors who wrote about the stock in the last quarter, in the last 90 days, and we average out their ratings. And that's what this box here shows. So for example, this shows that there were 19 Seeking Alpha authors who wrote about Tesla actually in the last 30 days, and 4 of them are bullish, 5 of them have a neutral rating, and 6 of them are bearish, and 4 of them are very bearish. And so this number here is the average of what they all say. This is wisdom of the crowds. And there have been academic studies that show that Seeking Alpha has much better predictive value for stocks based on crowd sentiment and what all of our authors think than other systems, including Wall Street.
Amazing. I have another question actually. If you could go to the earnings section, if you go up and if you click on earnings, and then second tab would be the earnings estimates. Actually, this is the section I use all the time because you have a estimated earnings and also the revenue forecast for next 5 years or 10 years. My question is, it was the always in my mind, how reliable this data is, and also what kind of people are giving these predictions. Could you explain to that?
Yeah, with pleasure. The earnings estimates come from the Wall Street analysts who cover the stock. One of the things that we're not yet doing on Seeking Alpha is asking Seeking Alpha authors to estimate what companies' future earnings are. So the earnings estimates come from the Wall Street analysts who cover the stock. How reliable are earnings estimates? Not very, to be quite honest. Wall Street analysts are not that good at predicting companies' earnings. And I think in many cases, their predictions of companies' earnings are very heavily based on the guidance the companies themselves give. So companies themselves will say, here's what we expect our earnings to be, over the next year. And Tesla's an unusual company because it can grow so fast, or people are worried that it will slow down. Like what happens in the China market for Tesla, for example, its ability to sell cars in China. So Tesla's unusually volatile in terms of its earnings estimates, even in the near term. But many companies just give guidance, and then the Wall Street analysts reflect that guidance, and they kind of repeat the guidance. As you look further out, the estimates become more and more guesswork. And I think it's here that that individual investors have an advantage over professional investors, which is sometimes individual investors have a really good sense of, I think this company is really going to grow. And in that case, if you're much more optimistic than what the analysts are saying in terms of the company's revenue growth, for example. So here we also show revenue growth estimates, right? Where here you can see the predictions of how much Tesla will grow its revenue. I think there's very little science involved in this. And so I think that if an individual investor is much more optimistic than the Wall Street analysts, you should follow your gut on this. And if you look at the really successful growth stocks like Apple and Facebook and Google, that have now been around for longer than 10 years, you can see that the earnings estimates now are massive. The companies are earning massively more now than they were predicted to earn by Wall Street analysts.
Great to know. I can see that my audience will have to dig into each section and explore themselves, because I can see that you can easily spend the whole day with Seeking Alpha. So maybe my next question could be, what would be the best practice, best way to utilize the information available in Seeking Alpha? If you are not really a sophisticated investor, let's say you are just a new beginner, what would be the best way?
I think the best thing is to